Hello everyone, welcome back to All Financial Discussion channel. For this video, in fact, it's actually a question from you guys. Someone asked me this question through the email. Should I invest in S&P 500 now? For me, there are actually three considerations. Okay, the first consideration, so is actually on the time horizon. Okay, whether you are short-term investor or long-term investor, this is actually a very important criteria to consider whether you want to invest into S&P 500 now. The next one will be the risk. What kind of risk that you actually going to endure? For example, at current situation, we know that S&P 500 is probably at or maybe near the all-time high. So always, technically, it's always very dangerous when we actually enter the market into all-time high situation. So therefore, you also need to consider this factor. Last but not least, what kind of return you actually anticipate. For example, for some, they anticipate to have a good return, okay, upon invest, but in current situation, when S&P is at or near the all-time high, it is almost very difficult to have another breakthrough. So basically, these three key parameters are the one that you need to consider before you can actually invest into S&P 500. This video, I'm going to do a deep dive, okay, in current situation, whether you can or you cannot invest into S&P 500 actually depend on yourself based on these three criteria. Before I continue, guys, I need your help. Okay, please help me by like this video. When more you guys actually help me to like this video will have better chances to reach out to a larger audience. So guys, help me press the like button now. For those who are new to this channel, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer. Okay, so this is not a financial advice. Please conduct your own independent research and consult a professional if unclear. Never invest more than you are willing to lose. With this, we are ready to kickstart today's discussion. Should I invest in S&P 500 now? So the three criteria. First one, time horizon, risk tolerance, and investment strategize. The first question you should ask is on your time horizon. Are you a long-term investor or a short-term investor? So for most long-term investor, the answer is yes, you should invest in S&P 500 now. Why? So if you have a long-term horizon, for example, you need to have more than 10 years. Okay, so basically this will be ideal for long-term investor. This is because for S&P 500, it has historically been good to invest. Why? Always when we actually try to time the market perfectly, this is actually very challenging, even for those pro. So the key is the time in the market tends to be more important than timing the market. So how long your time in the market is very important. So for example, for this case here, if you are long-term investor, okay, we know that S&P will actually trend outward over the long run. So later on, I will have a chart to prove it to you. Okay, so this is what I meant. Okay, so despite periodic recession, crash, and correction, we know that S&P has a trend that they actually will go outward over the long run. So let's come to the chart. Okay, for example, this is actually for 1 month. Okay, the past 1 month on S&P 500. Why I say that currently is an opportunity, as you can see that this past 1 month, this in fact will be the key opportunity for you to buy now. So if you miss this book, you may have very difficult position to find again back to this position. Okay, so like I mentioned, this is for 1 month. You can see that this is almost the lowest point when we actually see the data at 1 month. Next, I'd like to show the 6 month. From this chart, you can see that S&P 500 most likely will be in an upward trend. No doubt there is actually a so-called downward trend at current situation. But as you can see from the rest of the data, no matter what happened after the downward trend, there is actually a strong upward trend again. So from here, you can see that there will be a significant downward trend. I believe that later on, it should have a upward trend. Okay, so study your own research based on this. Next, on the yearly basis, okay, so as I mentioned that if you look at the bigger picture, you can see that S&P 500 most likely will go up. Definitely because of certain news, certain situation, there will be a dip then. Okay, but over here you can see that a long time it actually will be better. So therefore, for long-term investment, this is definitely positive. Whether you're supposed to invest into S&P 500, the first question, are you a long-term investor? If you are, so for me, you should invest S&P 500 now. Next, let's take a look whether it is favorable to invest into S&P 500 now or not favorable into investment into S&P 500. Let's go into the favorable first. Okay, so what look favorable right now? The first thing is Fed probably will cut the interest rate. I know there is a lot of uncertainty, but looking at this CME group currently, okay, so we can see that more than 86% actually think that Fed will actually cut the interest rate. So this is the first reason we anticipate that the Fed will cut the interest rate during the December Fed meeting. Next, okay, so the lower rate, okay, which means that when Fed cut the interest rate, this is actually very supportive, okay, for example, for stock. This is because we are going to have a cheaper borrowing, so therefore more money will go into risk asset, as you can see from this investing.com so-called proving this. Next, Goldman Sachs is in fact very optimistic. So in fact, they actually raised their 12-month S&P 500 target based on potential rate easing. Second criteria, corporate earnings growth. Okay, so according to Goldman Sachs outlook, okay, so they actually feel that the earning per share (EPS) for the S&P 500 are expected to grow. In fact, they are actually target around 10% this year, 2025. Next, if this earning actually hold up, okay, so this could drive returns, even though if valuation expansion actually slow or probably also reverse. On the third criteria, okay, some investor actually think that valuation is in fact like a risk, but definitely it's not a clear exit signal. Okay, so this is some investor actually feel that. Okay, so some investor actually argue that valuation alone are not a good signal for exiting the market. So if rate continue to fall, okay, like I mentioned earlier on, we anticipate that Fed will cut during the December meeting. So this actually will drive the share value. Okay, so basically for the equity valuation, this could re-expand, giving a boost to the market. So this is actually proved by Goldman Sachs again. They actually link that lower bond actually led to higher equity P&E. The bull case, okay, the reason for you to invest into S&P 500 now, historical resilience. Okay, so basically S&P 500 has a proven track record of recovering from every single downturn it has ever faced. Okay, so this include the Great Depression, 2008 financial crisis, and the 2020 COVID crash. Okay, so basically from here you can see that for a long-term investor, this historically has been rewarded. Next will be on the innovation and profitability. Okay, so the top S&P 500 in fact capture the top 500 company in US. Okay, so basically this group of company, they are actually packed with the world's most innovative and also profitability companies. For example, Apple, Microsoft, Nvidia, Amazon. Okay, so basically they are actually leaders in transforming the field like AI, cloud computing, and digital service. Their continued growth can drive the index higher. Next, soft landing narrative. Okay, so many economists and also investors, they are actually very hopeful that Fed can actually engineering a soft landing. Okay, this will tame the inflation without trigger a severe recession. If this really happen, it will be a very positive environment for stocks. Next will be the potential for rate cut. While the timing is definitely uncertain, the market expect the Fed to eventually cut the interest rate. Lower rates are generally positive for stock as they can actually potentially reduce the borrowing costs for company, and this make bond less attractive, and therefore people will actually go into higher risk such as share. Last but not least, diversified. Okay, so basically when you actually buy into a single S&P 500 index, for example, VOO, IVV, or SPY, this actually give you instant diversification across 500 leading US company. This in fact will reduce your risk as compared to own the individual stock. Earlier on, I mentioned about the feasible to invest onto S&P 500. So now I'm going to consider the unfavorable condition when we actually invest into S&P 500 now. So I'm going to go through the risks and also the things that we need to be careful about. The first thing will be on the high valuation of the company in the S&P 500. According to some analysts, okay, so the valuation metrics like P over E, they are actually elevated. Okay, so this can be very drastic when the value of P and E actually are at the high side. Next, okay, the IMF basically warned about the disorderly correction because the valuation might be disconnect from the fundamental. High valuation simply means that there will be lesser margin of safety because the gap between the P and E, they are actually very minimum now. So because of this, we are going to have lesser margin of safety. The future returns, they could be modest or in fact downward risk larger, as any form of growth, there is any sad news, disappointed news of the corporate, this may be a big issue. Next, on the economics risk, so President Trump actually implement a lot of tariff, and this tariff actually create a lot of trade uncertainty. This in fact will have some impact on corporate profit. Even with potential Fed cutting the rate, even in December or maybe let's say next year 2026, inflation still remain a big concern to the Fed. Some firm, in fact, because of this inflation, they actually revise the earning, because they feel that the cost pressure is still very high. Let's come to the concentration risk. So a very big portion of the S&P 500 gains and also the valuation, they in fact just concentrate in a few mega cap tech or AI company. So if those company, they have some form of correction, the broader index in fact could suffer. Let's come to the lower long-term return expectation. So we are going to anticipate that when we also invest into long-term, we are going to expect a lesser return. So some forecasts actually suggest that lower 10 years return than historically average because starting valuation, they are in fact very high. The high valuation now could compress future even if earning grows. So basically this is the consideration, why we should not invest into S&P 500 now. The bear case, the reason for us to be cautious, first one will be the high valuation which I have explained. So now let me add more points into the consideration. So the market valuations as measured by metrics like the price to earning ratio, they are considered relative high by historical standard. So this actually suggests that the market is not considered cheap anymore, and in fact they could be vulnerable to pullback if the corporate earning actually disappoint. Next, okay, the higher for longer interest rate. Early on, in fact, much earlier on, we actually anticipate that Fed will aggressively cut the interest rate. But now we know that we are going to have a higher for longer interest rate. Fed not so-called Fed definitely cut the interest rate, but they didn't cut the interest rate aggressively. So therefore, this Fed, in fact, has signaled that interest rate may stay elevated for longer than initially that we anticipate. This can actually pressure stocks valuation and in fact will slow down the economic growth. Next will be the geopolitical risk. Okay, so we know that there is a lot of ongoing conflict, okay, basically Russia and Ukraine and also at the Middle East. And from time to time, we also see this escalate tension, okay, between US and China and also now China and Japan. They actually create all kinds of uncertainty, and this in fact can potentially disrupt the supply chain, the energy price, and this actually fuel the inflation. Next will be the potential for a recession. Definitely, early on, I did mention that a soft landing is definitely possible. However, the risk of recession is not a complete zero. If the economy actually contracts significantly, corporate earning will fall, and this will likely lead to a bear market. Last but not least, there is a huge market concentration of the S&P 500. Okay, so this S&P 500 recent performance, in fact, is heavily driven by a very small group of giant tech stock. Okay, we always call this magnifying seven, okay, which is Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. Okay, so if this narrow leadership actually fail, okay, the broader index in fact could struggle. Let's come to my last two slides for a conclusion. Let's come to the actionable steps. Okay, so in fact, if you ask yourself, if you are a long-term investor, okay, so basically you can consider to start now your investment, or if you have continuous invest, you should continue your investment plan. So the key thing is to use a dollar cost averaging approach to build your position steadily. Next, if you are nervous after you hear from this video about the current situation, you can always start with a smaller initiative investment, and thereafter you can commit to add it regularly with this dollar cost average approach. This, in fact, can reduce your physiological burden. If you are a new investor, okay, so basically if you are total new, a start to invest, you can open a brokerage account and start with a lower cost S&P 500 ETF. For example, this BOO by Vanguard, IVV by iShare, or SPY by State Street. Last but not least, based on my final verdicts, okay, so basically for an investor with a long-term perspective, it is always better to be invest in the S&P 500 rather than you sit on the sideline waiting for the perfect moment that may never come. If you are long term, and basically if you have this objective and if you stay disciplined, okay, so by applying the dollar cost averaging, okay, I must say that you can confidently invest now and continue to invest throughout all different kinds of market condition. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.